Good afternoon and welcome to NYFB. At this noon hour on this Monday, we are seeing the major U.S. stock averages in the red. Joining me this afternoon is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
My pleasure.
Well, we are seeing a little bit of downside for the equity averages. We are awaiting the earnings reports that will be coming out after the closing bell today. It does seem as though focus is on some Eurozone developments as well as the Japanese yen. Now, we have been seeing that currency decline following the BOJ following through on its stimulus plans. So what are you paying attention to right now?
I think the market, is just basically taking a little bit of a breather here. Of course, on Friday, we made up a lot of the heavy losses that we had early in the session, and then of course this morning it looked like as though the futures were indicating a very positive opening due to the bond buying program from the Bank of Japan that was initiated, and of course, as you pointed out, the fact that the Japanese yen is now closing in on parity here, and that is 100 to 1, and that in itself, just reconfirms that the injection of liquidity, both here in the States and of course in Asia and in Europe as well, is continuing to actually support equities at this time. So I think, there's some concerns over the first quarter earnings season. I believe market consensus is that earnings are probably going to grow like 1.6%, which is down from 6.6%. But I actually think we're probably going to see the earnings season actually come in on the negative side of about 1%. So basically there is that fear out there, and I think that's probably why we're seeing a market that's not responding to what we saw happen in Japan.
Well, it's only a few more hours until we get Alcoa's results, so we won't have to wait too long for the kickoff to the season. But Peter, I do want to get your take on what we saw over the weekend in the Eurozone. We had Portugal as well as Greece back in the spotlight. Now, the merger plans for Greece's two biggest banks have been stalled, and the High Court over in Portugal did strike down some of the austerity measures. So how concerned are you about those developments?
Well, if you look at the some of the facts that happened over the weekend, obviously, you would think that the market today would really be falling apart. Now, with Portugal back in the picture again, that just adds to the political uncertainty that continues in Italy, and of course, perhaps even rumbling that Cyprus might actually be leaving the Eurozone. And yet we don't see a real negative reaction in terms of the euro, and we didn't see a negative reaction within the European equity markets. So I think that, again, it goes back to that fundamental fact that liquidity is really being supportive to the markets, and I can't help but once again emphasize the geopolitical scenario, which for now, even though I guess you might want to say it's noise coming out of North Korea, but when you have the president of China, the leader of China, sending a loud message, a clear message, a warning, that could be dangerous. So, again, geopolitical concerns, the euro situation are still pretty much alive in the marketplace, but yet the equity markets continue to do what they know best, and that is to rise.
And Peter, in between now and Friday, when I'll talk to you again, we have a lot coming out in terms of economic debt releases, and hopefully we'll get a better handle on what's happening. So thank you so much for joining me at the beginning of the week.
My pleasure.